Hi everyone, welcome to Thursday where we do share and review. Today I'm going to take a look at Contact Energy, which is obviously one of our main energy sources or gentailers here in New Zealand. So before I jump across, remember that this is for educational purposes only, certainly not intended for personal financial advice. If you're looking for personal financial advice, then you do need to go and talk to your own financial advisor. Let's take a look. Right, as you can see here, I have got Contact Energy up on the screen. And last week it did end up down for the week. You can see that here. Not a lot of volume. It's got about 2.3 million worth of volume there for last week. It's a little bit difficult, really. I mean, is this a bottoming candle? Who knows? What does draw my attention, though, are these moving averages. You can see back around the sort of middle of September, the moving average is crossed, and that is where the 15-week moving average crossed through the 30. Now, that is a warning bell for me. It certainly would mean that if I was looking to enter this share, I wouldn't be entering it. If I was holding it, I would make sure that I had my trailing stop in place. And to be honest, it could well have been triggered, given that we had a high here of about $9.42, and then we had these successive sort of falls. I have spoken before that quite often when you see a dividend, which was paid out or announced, if you like, at the end of August, that you do see a drop, and we have seen that, and obviously it has rebounded, but last week was still negative. So back to those moving averages, the 15-week is still trading below the 30-week. So again, for me, that is something that I would be quite cautious on. I would certainly not be leaping into the share at this stage. I want to make sure that the share is actually in a confirmed upward trend. And one of those confirmations for me is when the 15-week moving average starts trading above the 30-week moving average, which, as you can see, they're very, very close, but it hasn't happened yet. Let's just go over a 5-year chart and just see what's sort of been happening a little bit longer term. Take these moving averages off. Right, you can see that Contact Energy hit a high here back in January 2021, and it looks like that was sort of up around that $10.70 mark. It hasn't really got anywhere near that. Like most shares, it did have that big strong sell-off during COVID, and we saw a bit of a rebound, but basically since then you can just see that dashed line is where it closed last week at $8.55. Just really been hovering around it, so it could be it's a little bit range bound. So again, it's if anything, it's struggling. I mean, it's holding its own, but it's certainly not trying to break through any new highs or anything like that yet. It's just sort of meandering along pretty much sideways. Let's go back to the 2-year chart again, and we'll compare it to the main board of the NZE650. And that is a positive sign. You can see here that Contact Energy is trading above the high or above the NZE650. One thing that I would look at too is we've only had 2 weeks where it has been trading above. Other than that, for the last sort of 6 weeks, it's been trading below where the main board has been. Now, for me, I want to make sure that it's actually been trading above the main board for the last 5 weeks at least, because then that again can confirm a potential uptrend. So Contact Energy, it does pay regular dividends. You can see that here. They are every 6 months, but I've spoken of that before. I do not invest solely for dividends. If a company pays out a dividend, that's great, that's a bonus. More often than not, I will use dividend reinvestment plan to purchase more dividends, but I certainly don't invest into a share solely for the dividends, because I've displayed with other shares that they can actually keep falling even though a dividend is being paid regularly, and so often the fall in the price can negate any gains that you're getting from the dividends. If it's an upward trending share and it pays dividends, great. I will use dividend reinvestment plan, because that way I can buy more shares, usually at a discount to what they're trading at on the indices, and of course you don't pay brokerage on them either. But for me at the moment, Contact would just be just a wait and see, really. Just keep an eye on it and just see what happens over the next sort of month. So I hope that's helping. I hope you're getting value from this. And like I keep reminding you that, hey, I'd love to review any shares that you'd like me to take a look at. So leave a comment below. And until next week, take care.